Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. While we progress into a data and event heavy week, there's plenty of geopolitical updates keeping markets worried. Venezuelan political unrest is having quite an impact, especially on oil, which remains subdued due to the political challenges in the region. US and Germany, meanwhile, have reportedly asked citizens to move out of Lebanon as it seems that Israel will escalate its fight against Hezbollah. Good morning, JK. These geopolitical mixtures seem to not subside. Your thoughts, please.
Hey, good morning, guys. I think both the geopolitical potential upheavals need to be, closely watched, particularly the Israeli situation, because we know how Israel retorted, when they were attacked in October by Hamas, and that's what the countries are preparing for. However, there is a lot of restraint that the US is asking Israel to observe. So far, we haven't seen any escalation, but that cannot be ruled out. Similarly, Venezuelan political situation, it will have an impact on oil, and particularly when you consider, the uncertainty in the US politics, who is going to be the next leader, and the relation between US and Venezuela plays a big part. As far as the global oil supply is concerned. So something that we need to definitely not ignore, but seems like market is doing that right now, because the focus is all on how the monetary policy is going to move, particularly from the Fed, and then of course Japanese central bank, both of them meeting tomorrow, and UK central bank meeting on Thursday. Fed's chances are, quite well discounted for 2 rate cuts at least by the market, some even 3. But the reaction to any hawkish stance by Fed, which puts doubts about 2 rate cuts, can be much bigger than if they, align with what the market is thinking. So it's from market perspective, what they say will be very important. Let's remember that we don't have a dot plot, but Powell's statements or press conference will be very important. Japan's call is very close, whether they will hike or not. If they hike, it may still have a good reaction from the market, because many people still think they will not hike. QE taper will definitely happen. So there is some change that's going to happen in the Japanese market, policy. That's why the dollar yen is unable to make much progress, so far, and the yen crosses are coming under, further pressure. Interestingly, markets are now suddenly seeing a 59% chance of a Bank of England cutting rates on Thursday. So BOE is more likely to cut because of latest report from CBI retail sales that was say substantially weaker, and also the yields in UK have been falling, which is also an indication that the market is probably preparing for a rate cut, which was still recently not expected. So the markets yesterday on the stocks closed slightly higher on the S&P 500 and Nasdaq, but Dow was lower, but nothing very meaningful, because now investors are actually awaiting a raft of technology companies like Microsoft, Apple, and Amazon, that this week that will face a litmus test of their sky high valuations. So they all focus on data and the earnings report. And let's not ignore that we have the inflation and GDP number from Germany today as well, because a lot of focus on Europe growth, which was promisingly creeping higher, but no, recent data was somewhat underwhelming. So market will be closely watching. Euro, in the meantime, has slipped back to its support yesterday, mainly on the basis of yen cross-selling, and perhaps chances of ECB rate cuts also raising up to two more this year. On the rupee, with constant outflows for oil, other imports, as well as month-end payments, rupee has hit a new low in 4 out of the last 5 sessions, but has hardly been, felt by the market because there has been no follow through and a strong belief among market players that any up move in the dollar will be countered by central bank selling. Many uncertain global factors like major central bank policies, US politics, have all kept the big flows also at bay. While they will come in the eventually, but then right now they seem to be holding back, I would say. While expectations of Fed rate cuts have risen, they have already been discounted by the market also, and BOJ tightening can also have its impact on the Indian markets if there is a larger unwinding of carry trades. So that the politics in US, Kamala Harris and Donald Trump running very close as of now. Again, that raises a possibility of diverse economic policies which will have a global impact. So all these things, I think, rupee, not surprising that it is kept at a weaker level, and the sellers are somewhat cautious about going short on the USDINR, notwithstanding strong domestic macros. So this should continue till end of this week, by when will be done with all the major central bank policies, and then also the labor market data from US, which ends with the non-farm payroll on Friday. So expect tight range trading in the rupee, even in the dollar index, until all this data is over. Thank you.
Thank you, JK. And it seems monetary policy continues to remain in the limelight amidst geopolitical risk. BOJ meeting is a close call with respect to rates. And interestingly, the retail sales from UK was quite weak, which led to a sudden jump in rate cut expectations from BOE in the meeting coming this week. Today, we have the German GDP and inflation numbers, which will keep Euro watchers active. Earning seasons are on, and seems major tech companies will announce their result this week. Rupee, it has hit a new low in 4 out of 5 sessions, but there's no follow through due to the strong presence of the central bank, and due to the ongoing events. It seems the central bank is keen on keeping rupee on the weaker side. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.